Thanks for tuning in for the newest stock market news updates. For more videos on the latest stock news developments, press the like button and subscribe. With that being said, let's jump straight into the video. The world of consumer electronics is undergoing a transformation as market dynamics shift in response to economic pressures and changing consumer preferences. Recent developments within the technology sector have raised questions about the resilience of demand for electronic products, while companies grapple with the challenges posed by evolving market conditions. For instance, Best Buy, which is a prominent electronics retailer, faced challenges as it missed sales estimates in Q1. The company's performance was not isolated, reflecting the broader trend of dampened consumer demand for electronics. This raises questions about the changing nature of consumer preferences, the economic backdrop, and the overall health of the consumer electronics market. The challenges faced by electronics companies extend to PC manufacturers. Both HP and Dell are expected to report declines in PC sales, highlighting the broader trend of reduced consumer demand for personal computers. This trend is indicative of shifting consumer behaviors, as well as potential economic concerns that influence purchasing decisions. Despite the recent challenges, there are signs of optimism on the horizon. Best Buy's CEO expressed confidence that the decline in tech demand may be nearing its bottom, suggesting that the market could be on the cusp of a recovery. Additionally, PC manufacturers Acer and Asus experienced a sales lift in the recent past, indicating that there is potential for renewed interest in technology products. In other technology news, Apple, which is a technology powerhouse that is known for its innovation and iconic products, is poised to shake up the tablet market with a major redesign of its high-end iPad. As the company grapples with shifting consumer preferences and strives to maintain its position at the forefront of technology, this anticipated overhaul promises to redefine the iPad's role in the evolving digital landscape. There has been a huge decline in demand for technology products, including tablets, as remote work and digital communication became the norm. Because of this, Apple has faced challenges in sustaining the momentum of its iPad sales. Amidst these shifting tides, the company is gearing up for a major revamp of its high-end tablet offering. Apple's efforts to rejuvenate its iPad line are expected to encompass substantial changes. Among the anticipated upgrades are a new Magic Keyboard and the introduction of an M3 chip. These modifications signify a departure from the incremental changes of recent years, potentially reinvigorating consumer interest and driving sales. Apple's strategy has been to focus on incremental improvements to its iPad lineup in recent years. However, the forthcoming overhaul represents the first major redesign since 2018. This move signifies the company's acknowledgement of the need for substantial innovation to capture consumer attention and sustain market growth. The revamped iPad Pro models are set to be available in two sizes, an 11-inch version and a larger 13-inch variant. This expansion of size options caters to diverse consumer preferences and work scenarios. The promise of better displays adds another layer of appeal, further elevating the user experience. While the iPad has long been a cornerstone of Apple's product lineup, its sales have experienced fluctuations in recent quarters. The most recent data indicates a decline in revenue from the iPad segment, attributed to challenging year-over-year comparisons. Despite these challenges, Apple remains focused on innovating its products to address evolving consumer needs and preferences. Over in the realm of payment technology, this space is witnessing the emergence of Pagaya Technologies, a company that's garnering attention for its unique approach and potential to disrupt the landscape. With a focus on funding models and analytics, Pagaya has drawn the interest of analysts and investors alike, presenting a fresh perspective on the world of marketplace lending. JMP, a prominent investment firm, initiated coverage of Pagaya Technologies with a market outperform rating. This positive outlook reflects the firm's belief in Pagaya's differentiation within the competitive landscape of payment technology. Pagaya stands out due to its distinctive funding model, which relies on pre-funded securitizations and investment funds. This approach sets it apart from its peers, potentially offering the company a competitive advantage in the market. Additionally, Pagaya's integration into other lenders' platforms, coupled with a broader scale that extends beyond personal loans, positions its credit analytics and machine learning capabilities for success. Pagaya's growth is underpinned by factors such as the network effect and a robust pipeline. the expansion of lenders within the personal loan and subprime auto markets, alongside the development of its analytics engine for the single-family rental market, showcases Pagaya's multifaceted approach to growth. Moreover, the company's expansion into point-of-sale and buy-now-pay-later financing partners, coupled with discussions with top banks, further demonstrates its commitment to driving innovation and collaboration. JMP analyst David M. Scharf assigned Pagaya Technologies a price target of $2.75, indicating a significant upside potential from its current price. This optimistic outlook reflects the belief that Pagaya's unique approach to payments technology, combined with its ecosystem and growth drivers, could translate into value for investors. In other news, MongoDB, which is a prominent database technology company, is navigating the intricacies of investor sentiment and market dynamics. Even with a weak sentiment among investors, the company is positioning itself for positive results, backed by its own strengths and strategic moves. Citi, a leading financial institution, has noted weak sentiment among investors in the context of MongoDB's performance. Despite the sentiment, analysts at the firm anticipate that MongoDB will deliver more impressive results compared to its competitors. This divergence between sentiment and performance highlights the complexities of investor perceptions within the technology sector. Key drivers of MongoDB's resilience lie in its Atlas consumption and customer additions. Despite challenging market conditions, the company has witnessed favorable trends in intra-quarter inputs and the addition of new customers. These developments suggest that MongoDB's value proposition and technology offerings remain attractive, potentially contributing to a rebound in sentiment and performance. While web traffic data may not have been encouraging, MongoDB's increased job postings offer a potential sign of management confidence. The company's expansion of job opportunities indicates a commitment to growth and innovation, signaling a long-term view that may counterbalance short-term sentiment fluctuations. MongoDB's conservative guidance for the second half of the year aligns with the broader cautious sentiment within the technology sector. However, this conservative stance could create significant room for positive surprises, as estimates have the potential to move higher should market conditions improve or the company's strategic efforts yield positive outcomes. MongoDB is slated to report its second quarter results on August 31st. Analysts estimate that the company will earn 45 cents per share on $390.9 million in revenue. As the company prepares to release its earnings, investor focus remains on how MongoDB's performance aligns with these projections and whether the company can deliver results that surpass sentiment-driven expectations. For more videos on the latest stock news updates, press the like button and subscribe. With that being said, I wish you happy investing.